I was just thinking of how does one describe this festival, and the appropriate analogy that I came out with is this is really the Woodstock for this generation. Woodstock, as you know, for people of my generation, was an iconic festival which changed many lives. And I really think in more ways than one, the Singapore FinTech Festival is the Woodstock of the current generation. First and foremost, a big thank you to the government of Singapore, the Monetary Authority of Singapore, and in particular SOP, who's the driving force behind a lot of this, to give us this opportunity. I really don't know how much we have to say. I think Prime Minister Modi talked a lot about financial inclusion, and prior to that, Madame Lagarde touched upon most of the things we were supposed to talk about, but nevertheless. So let me introduce my esteemed panelists, all female leaders in their own right. Judith, Karl, Executive Secretary of the United Nations Capital Development Fund. Mary Ellen Iskenderian, President and CEO of Women's World Banking. And Greta Bull, CEO of CGAP. Coincidentally, three of us are either former IFC or current IFC employees. So Judith, food for thought for you there. I'll just touch upon a few facts and figures. The number of unbanked adults or unfinanced adults are about 1.7 billion today. And I want to move away from just talking about, it's not really just financial inclusion, it's inclusion at all counts. Because financial inclusion leads to other things like inclusion in health, in education, in social services. So this is really one of the biggest challenges facing this generation. The number for Southeast Asia, I'm told, of unbanked population, is about 63%, which makes it even worse. So there are really three things that I think we need to focus on going forward. One is policy, and this is where governments and policymakers need to play a role. The second is the need for infrastructure, and here I mean affordable internet so that the world at large can use these services, which is critical. And third is really how do we use data, data privacy, and what I would call responsible finance. So we've got 5 topics that we're going to talk about. So let's start. Sorry, I don't know. Anyway. So the first is really to talk about the importance of formal identification documents. And Prime Minister Modi talked about the UID. So this is really critical going forward. So Greta, I'm going to pose this question to you, really, is what can multilateral banks do with governments to make this happen? And any great examples are there for us to emulate?
Yeah. So obviously being able to identify people is a big challenge in terms of financial inclusion. Banks have to be able to identify and verify who customers are, monitor accounts, et cetera. And the cost of doing that is actually pricing many individuals and even countries out of the financial services market. So ID is a really important foundational element of financial inclusion. The World Bank has gone very deeply into this area and is working with a number of development partners on building out IDs in a number of countries. They've developed principles around what a good ID is, so things like universal coverage, free from discrimination, robust, meaning unique, secure, and accurate. Tech-enabled with open standards, interoperable, and with privacy by design built in, and with clear governance standards. And so the bank is working with its partners to roll this out around the world. But we do have some very interesting examples, both public and some private sector examples. So you heard Prime Minister Modi speak about Aadhaar, so I don't need to tell people about that. That's a reference for many of, and an inspiration actually for many ID schemes being developed today. Maybe a little less well known is what Peru has done with its ID system beginning in 1995 and evolving to cover civil registry identification, but also social services and a number of other functions, and 99% of Peruvians are covered by that. Estonia has also been a really forward thinker on digital ID and has 98% coverage of all Estonians, and it's a gateway to a number of social services, opening bank accounts, being able to get e-prescriptions and the like. Beyond those government efforts, there are some interesting things going on in the private sector, so collaborative efforts between banks. Finland and Norway were some pioneers in this space where banks came together to create eKYC functionality that enabled them to be able to identify and verify people who are banking with them. Thomson Reuters actually has eKYC as a service, and that's being experimented with in South Africa among several of the big banks. And the Fintel Alliance in Australia is an alliance between the private sector, the public sector, and law enforcement to make sure that these things are being covered. And even further in the future, thinking about the use of technology, there's a lot of good thinking in India and elsewhere about how you can create digital lockers so that people can take their data and their identity with them when they're forced across borders. And of course, this is being looked at very much in the forcibly displaced space. So there's a lot of innovation going on around identification.
Yeah, so thanks a lot, Greta. I think what's come out clearly is that the solutions are there. They're private and public, which is good to hear. And it's been done in a large market like India and smaller economies like Peru and Estonia. So it is doable if we all put our minds together and our resources together. One thing that people talk about a lot is, so you're going to get the poorest of the poor and the least educated, I would argue. You're going to give them access to financial services. And that really poses a dilemma on the importance of financial literacy. And I think it's important that, yes, you're giving people a choice, but do they understand what they're getting into? Do they know how to use it? And the financial literacy aspect is really critical. So Judith, I'd like to hand it over to you. And how can we help populations, especially at the bottom of the pyramid, improve the financial literacy? And also, what are the most common struggles that you think people are coming across, and how can those be resolved?
Great, thank you, Vivek, and it's great to be part of such a wonderful panel. So yeah, we hear a lot from our partners, banks, mobile network operators, microfinance institutions, that financial literacy is one of the biggest challenges that they face. I think we would say maybe it's a bit of an oversimplification when you're targeting bottom of the pyramid. You're really facing challenges of basic literacy and numeracy that are quite a bit bigger than the issue of financial literacy. And there are also challenges with how financial service providers communicate to the end customer about the functions, about the terms and conditions of services. We also need to consider digital literacy if we want digital to be a force for change, a force for inclusion, rather than something that is actually reinforcing both the digital and the financial inclusion divide. With the rise in technology-provided services, it's even more important that the interface and communication with the customer is very simple and clear. Smartphones offer a chance to create a more visual, more intuitive interface with the customer. And there are also some big tech solutions that are being deployed for financial inclusion and a variety of other development efforts. Just last week in Senegal, we hosted a conference of 120 partners in digital finance and innovation, and dozens of them went to the countryside to test out chatbots, an interactive voice response with rural Senegalese in both French and Wolof, which is their local language. This exercise was to show partners how interactive chatbots can help inform customers, in this case about how to receive social welfare payments through mobile money. What our team saw is that use of voice interaction in local languages is a really powerful tool to help people understand how to receive and use a payment. Although the connectivity issues are, of course, still a big issue in digital tools, makes them a bit more challenging to implement. It's also not just a question of literacy, but also a question of financial competency. At UNCDF, we've shifted from financial literacy programs that focus really on teaching the basics of financial services to financial competency, which focuses on how products are used to actually meet the daily needs that people face in their lives. So it's not about the services, it's about how to meet your goals using the services. In the Pacific, for example, we did an impact study of financial literacy programs almost a decade ago and found them lacking. And when training was provided in combination with immediate access to a specific product that customers themselves had identified as a need in their lives, we had much better results. Finally, we've been investing in financial competency training in schools. Over the past 6 years, we've worked in the Pacific with central banks, ministries of education, and our funding partners, Australia and New Zealand, to embed financial issues in basic curricula in 4 countries. That's in Fiji, PNG, Samoa, and the Solomon Islands. So actually math classes, home economics, and even language classes include lessons with financial issues and terminology that we hope over time will create a more financially competent generation. And I should say also that by having boys and girls learning in a school environment together on financial competency, we believe will change in a generation how boys see girls' financial agency in their local economies.
Thanks, Judith. I think that's really interesting because what we're talking about here beyond financial literacy is inclusion is going to give people an opportunity or access to education through online learning methods. I don't know whether it's financial literacy or consumer protection, but one afternoon on a Saturday I found I had a small charge on my Apple ID. And I hadn't bought anything. And later on I figured out I was half asleep, my 8-year-old daughter came, ordered something, used my thumb and bought it. So since then I've been tapping my thumb and maybe I shut my eyes because with them. But it's important because these are the sort of things we don't realize we're getting into really. The next thing I want to talk about is the gap really, and the gap between, the gender gap between the unbanked and the banked is close to 7%, and the gap between what I would argue the rural poor and the urban poor is about 13%. And on top of all that, over 50% of the unbanked or unfinanced are women today. So Mary Ellen, the question for you is, to put it bluntly, how can we close this gap?
Right. Well, I'm glad you gave me the easy question, Vivek. So the 7% gap that you mentioned actually is the gap globally. In the emerging markets, it's 9%, which actually doesn't sound all that bad. But when you look at countries that particularly have used technology to close the gap, unfortunately, you've seen it widen in many cases. In Bangladesh, you saw the gender gap in the last 3 years not only double, but now is at 29%. 29% difference between men's account ownership and women's account ownership. You saw a similar doubling although at a lower base in Pakistan as well. So the gender gap is unfortunately very stubborn, but in some cases, maybe technology is even worsening it, and that's really a big concern, and doesn't have to be. Really does not have to be the case. Some of the issues that Greta and Judith both mentioned are really exacerbated in the case of women. They have even less access to the necessary documentation and can be even greater beneficiaries of biometric or other technological means of identification. You've also seen in the last 3 years, the countries that made the greatest leaps in their overall national financial inclusion goals were the ones that, as Prime Minister Modi referred to, have digitized welfare payments. And in so many countries, we see that women are overwhelming recipients of those, or are supposed to be the overwhelming recipients of those payments. And that's where this financial competency versus financial literacy that Judith referred to came into play, because we found that financial literacy, digital literacy are particularly important in the case of women. They have so much less awareness, really, of what is available to them. We're doing some work in Mexico with a very long-standing, very successful conditional cash transfer program there called Prospera. And the Mexican government had done some really excellent financial literacy training as part of the conditions to receive that cash. But it wasn't really training the women on things they needed to know or that would change behavior in important ways. Something as simple as so many women telling us, I'm afraid if I continue to save the money on the phone, in the wallet, the government will think I don't need that payment any longer. So very, very basic understanding of what is available to them and what is required of them or is possible as a result of financial inclusion isn't necessarily sort of fancy financial education, but can be very, very basic. And frankly, just asking the women, what it is they need, what it is they want, often can close that gap.
Thanks, Marielle. And I think some of those are very interesting statistics that you shared with us and the challenges that we face. But I think there is also the cultural issues which are critical. And I think, to put it bluntly, if one argues that about 50% of the global population is women, how do we get them into the workforce? And this is critical. If they're not going to have access to basic financial services, it's going to be much harder for them to be a part of the workforce and have a productive sort of contribution. And the amazing thing is that even in markets where we've had major issues like Fiji and the Solomon Islands, actually this challenge has been tackled. And I'm hoping that this will continue thanks to some of the great work that you're doing, Marielle. Yeah. I'm going to share some statistics. So in China, about 85% of those who buy products or goods or services online pay for them online. In Malaysia, I'm told that number, according to Findex, drops to 50%. And in Vietnam, it drops to 90%, which means only 10% of people who are shopping online are actually using online methods of payment. So coming to you, Judith, again, old habits die hard. And I think Madame Lagarde referred to it in her speech. How do we get people to start using or moving more towards a cashless society? How do we change habits?
Thank you, Vivek. Yeah, this is an issue that UNCDF spends a great deal of time on. For financial inclusion really to be meaningful for people, it has to address specific needs in their real lives. And for many people, that means basic needs. So as many of you may know, we host the Secretariat for the Better Than Cash Alliance. This is a public-private partnership that promotes the use of electronic payments in a way that helps governments and individuals better manage their money. It focuses on both the savings and the accelerator aspects of digital payments. And initially, the focus was on making the case for payments themselves. I think that in the past few years, that case has really been made through the tremendous growth of the volume and diversity of payments in China and Kenya and Peru and other places. The Alliance has created 6 toolkits on digitizing payments, customized for governments, companies, and development partners, to name just 3. They've also worked to investigate and highlight how payments have made a difference in humanitarian efforts, in supply chains, in energy and agricultural value chains. Most recently, they co-authored a report to show how payments are helping to achieve the SDGs with the UN Secretary General's Special Advisor, Queen Maximus Secretariat. Also within UNCDF, we've worked very closely with the private sector to manage payment efforts for social welfare, which has come up quite a bit in the discussions today, in agriculture and employment, all key issues linked to the SDGs. Remittances are also very important. Global remittance flows to developing countries in 2017 reached about 466 billion, around 3 times the flows of development aid. We see remittances not only as a major driver of financial inclusion, but also a critical development issue. It's part of the Global Compact on Migration and an indicator in the SDGs. And for many families globally, of course, remittances are the basic income that they survive on. Remittances are an example of what we need to tackle a global issue if we want to get really to local results. New technologies and more international awareness are helping to bring down the costs, but in many of the regions, those costs are still far too high. We have a partnership with the Monetary Authority of Singapore on a challenge fund to develop financial services in the ASEAN region. And the first challenge we launched was around remittances in the region. MAS has also been outspoken about the potential for distributed ledger technologies to reduce the settlement costs linked to remittances, and we think there's a tremendous amount of promise there. Finally, an issue close to our heart is youth and youth unemployment. Youth unemployment is not just an economic missed opportunity, but also a social and a political risk. We recently launched a new program in the Gambia and Guinea, which will link youth with short-term work opportunities while at the same time paying them through an account and offering them skills training and financial literacy lessons on how to use those accounts. We intend to link this with online marketplace via a mobile app that will match these young workers with employers who will be made aware of their training and employment history. We also know that connecting youth with the financial sector also has repercussions for their families, for their communities. They tend to provide referral to others, and they have a much more hopeful outlook on their futures when they make those connections to the financial sector. So we think transaction accounts are needed not just to drive financial inclusion, but to help achieve the Sustainable Development Goals in a much wider sense. And I just wanted to mention before I close, Vivek, that the Secretary General of the United Nations recently announced the creation of a task force on the digital financing of the Sustainable Development Goals, which will be co-chaired by the Administrator of UNDP, Achim Steiner, and for which we at UNCDF will be acting as the Secretariat. The role of this public-private task force will be to highlight the many ways in which the changes in the financial sector due to digitization are creating opportunities to achieve and accelerate the achievement of the SDGs. So we would certainly invite all of you to check the UNCDF website later in the year in December, as the task force will be soliciting ideas about how digitization of finance can help us finance the 2030 agenda. Thank you.
Thanks a lot, Judith. And I think coming on to the next point that we had is, so when we are going down to the bottom of the pyramid and people are going to put their life savings into an account, whether it's a transaction account, a virtual account, or a bank account, we really need to worry about the fact of what sort of protection do they have, what sort of regulatory protection can the government provide them, and what are the regulators doing? Now, I know my friends in fintech don't like it when I use the word regulations, but I think they are essential. We need to ensure that the poorest of the poor are being protected as they are being mainstreamed into society and into the financial literacy, into the financial sector. So, Greta, very quickly, how can we find these kind of solutions to develop this trust?
Well, I think consumer protection is sort of an evergreen problem, and it's just become incredibly complex with the proliferation of new technologies and new business models. So as the frontier moves out in terms of opportunities, it's also moving out in terms of risks, and I think we really have to stay on top of it. So payments open up a lot more consumer risk around privacy, around cybersecurity, around fraud. And so we at CGAP have long advocated that consumer protection is just as important as system integrity, stability, inclusion, and consumer protection. And we sort of think of that at three different levels. There are responsibilities at three levels. So for consumers, we really need to do more work to make sure, as Judith was saying, that consumers are able to make the right decisions, that they're informed, that there's transparency in the products that are being offered to them, and they're actually providing consent to what they're buying before they click. And you can click while you're asleep, so, right, it's a much more complicated world. But also providers really need to take on responsibility. So, you know, are customers being treated fairly? Do they understand what they're getting into? And with the ease of providing services, there come real risks. So CGAP recently did a study in Kenya and Tanzania that found with digital credit products that half of people were delayed on paying, a third of people had actually defaulted on a digital credit, and 10% were going without eating in order to pay off a digital loan. So I think we have to think very carefully about the terms and conditions of those services as we offer them. There's also an issue around platforms, and we don't talk about that very often, but there are big platform providers making these services available, which is fantastic. It's a huge opportunity, but there's also responsibility that comes with that. So the GSMA, which is the Industry Association for Mobile Network Operators, has come out with a code of conduct, which is fantastic, but it doesn't mention credit. So does GSMA, because they're not taking credit risk, not have a responsibility for making sure that the products are healthy? So I think, you know, there's more work that needs to be done at the platform level. Similarly, you know, Facebook is, what's their accountability? What's their responsibility for the information that goes out? So I think we really need to think more carefully about how platform providers play in this. And then finally, regulators. I mean, there is a really important role for regulators. There needs to be a conversation between regulators and industry, and it should be very dynamic. It's a very dynamic and changing situation. So not just consumer protection, but also fraud, cybersecurity. There are lots of issues that the fintech revolution has opened up, and that dialogue needs to be continuous.
Yeah, I think, Greta, you touched upon all the critical topics. And I think it's important that we focus on this because the last thing we want is a big blow up, and that's really going to set the whole industry back many years. And really, I think the term that people have coined is they call it red tech now, regulatory technology. And I think there is some work happening on that. But as I always put it is, central banks have been used to regulating and supervising banks. They're auditors, they're accountants. But today, I think central banks, and Mass has done that already here, but they need to hire many more engineers to be able to regulate the whole tech fin sector. So very quickly before we conclude, Mary Ellen, I'm a great fan of technology platforms through non-bank channels, but I know there are some great examples of where banks have done a fantastic job at inclusion. Very quickly, if you can touch upon one or two of those examples.
Sure, and I do firmly believe that the best examples are partnerships, are where banks do what they do well and fintechs do what they do well, and they come together to deliver an excellent product. I guess just an example that I often use is a bank in Nigeria that we've been doing a great deal of work with over the last few years. Diamond Bank, when we started working with them 5 years ago, was the 4th largest corporate bank, had no retail presence really, and had made a decision that if they were going to go into the retail sector, they really needed to go down market. The mass middle had already really been addressed. They were also prepared to make a very substantial digital investment, and that was absolutely key. They brought us in, and I think this was another very key point that banks are uniquely positioned to do, and you've touched on it, Vivek, is they brought us in to design liability products, to design savings products, not credit initially. And so we built a digital platform for the merchants in open air markets. Any of you who've traveled in West Africa know about these enormous open air markets that actually modeled itself on the traditional savings collection. We now, about 3.5, 4 years later, have over 600,000 merchants on this platform, both with a transaction account as well as a savings account. We very quickly discovered that women merchants in particular, wanted a long-term savings option that they could have a commitment or a goal to save toward. And very quickly, within really 6 months of the launch of the account, the bank came back to us and said, we can lend against the deposits that people are making in their accounts as great collateral. And so, of course, we then went in and designed a lending product. We're now working with them on a digital credit product that, again, works off of the savings behavior that we've already got established to build a credit algorithm. So I think we've got a great possibility for partnership here if both sides really bring their best game to serving this population.
Sure. Thanks a lot, Mary Ellen. And I'm a firm believer in technology, although I'm on the wrong side of 50. But I actually think, and this is where a lot of my banking friends, and I'm a former banker, disagree with me, is the cost of delivery is so much cheaper. It's, I believe, 1/3 or 1/4 through a digital platform. And I think what we've seen in markets like China, which is now being adapted to many other markets across the globe, is really, truly transformational, where you can lend money, and we at IFC have done that, to a girl or a woman between the age of 21 and 33 for vocational training in a frontier province. And this is something I think we could not have imagined 3 to 5 or even less years ago. So most people call this a smartphone or a cell phone. I firmly believe this is more a ladder for the poorest of the poor to actually climb out of poverty. And I think we're seeing that happen. We're going to continue seeing it happen. Let me conclude with a quote, and you should guess who it's from. There's a lot of fear of technology. It's taking jobs away. What's going to happen? It's the fear of the unknown. The quote goes, if men have the talent to invent new machines that will put men out of work, they also have the talent to put those men back to work. Yeah. Does anybody want to hazard a guess who said that and when? This is John F. Kennedy in 1962. So let's not have a fear of technology. A big thanks to my esteemed all-female panel for coming here and for great comments. Thank you very much. And I'll just end, I think when Madame Lagarde talked about winds of change, maybe she was also thinking about this being Woodstock, actually. So thank you very much, and a warm welcome to all of you all. Thank you.
Great. Yeah.